Hello traders, Barry Burns here with the second course in our Foundation series, and this course is all about momentum. Momentum is one of the most powerful concepts in all of trading, but it's not quite as simple as trends are. So the first course we looked at trading retracements and cycles basically. Cycles are pretty simple because they are just direction up, down, and then we look for retraces in that. Momentum is a little trickier, and so people have a little more challenge trying to grasp this. But once you grasp it, it can dramatically revolutionize your trading. And perhaps part of the reason for that is because so many people do not ever grasp this concept, and so by getting this, it puts you head and shoulders above many other traders there, especially other amateurs. Now the pros, they all understand volatility, but the pros, we're not worried about them anyway. They're going to make their money. We want to be better than the amateurs. So this could be your first step in making that leap, and so let's jump right into it. Okay, the primary indicator, and by the way, I'm assuming that you've already read the manual, because the manual gives you the introduction to momentum, brings you up to speed on the indicator and so forth that we use here. Really, there's two indicators. And so very, very important that you read the manual first. If you haven't read that, you might as well stop the video right now. Go back and read the manual in its entirety, and then come back to the video. It's really that important. Otherwise, you'll be lost. So here's price on the top, and of course down here we have our primary volatility or momentum. Really, it's a momentum indicator. And what I want to do is, just like we did with the 50 MA, when we started our last course, we just put price and we put a 50 moving average over price, and we just looked at a bunch of bars, and we got a feel for how price interacted with the 50 moving average. Now we can't really put the momentum indicator on top of price because they have a different scaling, and so you're not going to get that same exact relationship, and you're not going to get support resistance out of the momentum indicator. But our primary momentum indicator is DAD. I call it DAD, and basically because it does help us with direction. Now we have a zero line here, and the zero line means there's no momentum. Now, what is momentum, real quickly? It means the power, the force, the velocity, acceleration. These are all, terms that have slightly different meanings, but for trading, that's basically what we're looking at. You can just think of it as the force behind behind a trend. And what we're literally measuring with our indicators is just the difference, the spread between two exponential moving averages. It's really that simple in trading. So this is not physics that we're doing here. Okay, so and our primary indicator is DAD. And again, you can see all of the parameters of the indicators in the manual. So we're coming down. Momentum is down, and you see DAD is down. And then momentum evens out here a little bit. Now, again, the key is really momentum has just zeroed out here. This is not really a reversal of momentum. It's just there is no real momentum right now, and that's what's happening here if you look at price. And then we get some momentum coming back into the market as well as a trend. And so we go down. Okay, and just watch the line and along with price. Okay, now here's a key area. This is one of the most important parts of momentum. Momentum, the reason that momentum can be such a powerful energy to add to your trading quiver is because it is one of the few things, along with volume, that can actually lead price. Everybody's looking for a leading indicator, and I'll tell you, I've bought all kinds of proprietary indicators. I've bought pretty much everything out there, a few exceptions. But you know what? There's really not much that's any more valuable than what you get on a standard charting platform. But a couple of things do have a tendency to lead price. And as I said, one of them is volume. We're not going to get into that in this course. It's actually somewhat complicated as well. But the other one is momentum. And so that's our course for today. So let's take a quick look here. We had, here's trend, right? A trend is a lower low, lower high, lower low, lower high, lower low, okay, and then here it's broken. So here we see our levels, our highs and our lows. So that's a clear downtrend. But look what happens here on our momentum indicator. We made a lower low, but on momentum we made a higher, or I'm sorry, that's a high or a lower high. Gets a little confusing sometimes. A lower high. Here we put in a higher high. And this is what I mean when I say that momentum can lead price. This is one of the first issues people get confused about. They think that I mean that just the angling of this line is leading price, and that is exactly not what I mean. I do not mean that at all. The angle of the line is what we look at for momentum. That's true. But the angle of the line actually lags price. It follows price. It does not lead. What leads, or what can lead, to speak more properly, are the highs and the lows. So that we will put in this case, a higher high in the momentum indicator before we put in a higher high in price. I mean, it's not even close here, is it? The higher high in price doesn't come until way over here. Same with the lows. We have a low here. Okay, and then the next low is a higher low on the momentum indicator. But in price, we still have a lower low. So again, momentum now has led price, and this is kind of the magic formula that if you get a higher high and a higher low in momentum, that gives you a very high probability of a reversal. Now, what does a reversal mean? Does a reversal mean that, okay, now we're going to get a reverse trend and we're going to go up 1,000 points? No. We don't know how much will reverse. A reverse just basically means we expect to break this high. See, by the time we have this higher high and higher low, we're way down here. And so what this pattern is telling me on the momentum indicator is, okay, at here I'm expecting us to go back up and at least break this high. Well, if I break that high, I have now price will put in a higher high. That means by definition I no longer have a lower high, lower low, lower high, lower low. I now have a higher high, and therefore trend can reverse. The trend has not continued, that's for sure. We have a break in the trend. So that's as much as it tells you, and of course nothing's 100% accurate, including this, but it's actually amazingly reliable, especially when you get into extended trends. And an average trend, no, but once you get into extended trends, you know, again, the trend is your friend until the end. Well, if you're trading in the direction of the trend, you want to get in early on that trend. The later you get in, the less likely it is to continue. So for reversals, it's exactly the opposite. We want to get in late to the trend. And so we have 5 energies talked about in the market. One of them is trend. And even if you're taking reversal trades, trend is still one of those energies. It's just that now what we're looking for in trend has changed. Now we're looking to get in late in the trend instead of early in the trend. Okay, but that is really the magic little pattern there, and it did indeed cause us to put in a higher high, creating at least a temporary reversal. Now, before we move on, let's talk about that. So, let's say I'm taking this as a reversal trade. That's a good reversal pattern, and I might, of course, what I'd like is I'd like us to go up to 1,000. but I don't know what's going to happen. There's no way. So what I need to do is put my cycle indicator back on here. And okay, so I'm going long way down here. I'm picking a bottom. You know, they say you can't pick tops and bottoms. Well, you can pick them. It's just a matter of whether they're going to make you any money or not. This is a high probability scenario where it will make you some money. But since we don't know how far it's going to go, we still need to adjust our cost position. And the next cycle high is where we want to lock in half of our profits. Okay, because if I can make, you know, I'm risking basically that. My reward is this. So I've got a winning trade already. Whether this thing starts a new uptrend or not, that's way out of my hands. I have no idea. All I want to do is catch that initial move, take off half. Now I don't have a losing trade. I've got a winning trade pretty well locked in, barring, you know, a major gap against me. And then you just ride it. You see what happens. If you get a new trend starting up, then you're in at the very beginning of that trend, and you want to use spectacular psychological management of your own mental state in order to hang in for as much of that trend as you can, and not take your money out too soon. On the other hand, it might just be it could go into consolidation, and you could just put in a basing pattern down here. That's another option. A third option is we could get a complex retrace where the market goes into just a brief little uptrend, ABC pattern or ABCDE, and then it continues on down. So we don't know what's going to happen. We're not forecasting it. We just know that here at this bottom we have a high probability scenario breaking that last high. So I'm going to lock and have my profits up there, and then watch the market bar by bar, cycle by cycle, and manage my money accordingly, and see how long I can hang in. It might be a very short time, might be a long time. And that's why you need to know these different patterns, so that as the chart evolves, you know what you're looking at. You know what the pattern would be, because you know what the rules are, the parameters of each chart pattern are. So let's go ahead and move forward and see what we got. Okay, now we came all the way back down here to this bottom. Okay, we're going back up again. Will this be a double bottom? Well, I don't know. Let's see. Yes. So this is great. Now we've made another higher high. This often is very common for the market to come back all the way back down here and test this. And it eventually puts in a double bottom. We're in here. See, we're in at the low of the low. That's a nice 3-bar reversal pattern there too, by the way. And again, you can't get freaked out when this thing comes all the way back down, because look, now what's happened? Look how we've got higher high, higher low, higher high, higher low. See that? Momentum leading price. Is price putting in higher highs and higher lows? Well, not really. It did put in a higher high, but this is basically an equal low. It's a double bottom. But that doesn't show up on momentum. Momentum says, no, yeah, the price made an equal low, but there's still momentum to the upside, and therefore it's likely that this will hold and not fall on down. Okay, let's just keep going. So we got our higher high. Okay, look what happened up here. High, a little bit of a lower high, and that's confirmed by momentum. Just a slight little wave pattern there. Okay, nothing, not a lot, just a little bit. Again, a little bit of a head and shoulders type pattern is what that actually is. A little mini one. Head and shoulders patterns don't always result in complete reversals. It's really what this is what? We've got a trend going up, right? we've got higher highs. Let's look at this. We had a higher high here, equal low. Higher high, and then what? This is not a reversal. This is A, B, C. Simply a complex retrace in a trend. And so momentum stays to the upside. Higher low, higher high, higher low, higher high, higher low. We still have a higher low here. Right? So trend is still up. We just had a complex retrace. This is a simple retrace. To take this, we'll bring our cycle indicator up later. But if we had a cycle low here, yeah, that's a valid trade. The previous cycle high is always resistance, always. And so that's our first minor resistance. We're going to take half our position off. So this would be a failed trade. But you got to watch for these ABC patterns, because if the trend continues, if the trend is still up and this is still a valid entry and you've got a cycle low here, this is a much more powerful long than this. Complex retraces are more powerful patterns. They generally create more of an explosive move afterwards than a single retrace pattern. And again, momentum is still there. So always, always, always watch for these. What happens with a lot of amateurs is they say, oh, okay, I got my first, this is not probably going to be a cycle here because this is too small. So I got my first retrace in a trend here, and oh, it didn't work. And so they get bummed out, and then they say, oh, and it broke this low, so now I got a downtrend. Well, you have a very short-term downtrend. Yeah, your 15 EMA is going to be turning down here, but your 50 EMA could very well continue being up, and we're trading the intermediate trend, not the short-term trend. And so you need to be a pro. You can't give up just because, oh, you had one little failed trade here. You need to keep watching, recognize this pattern, and say, okay, well, had a little scratch trade here. Maybe I lost a couple bucks, but now what's going on? What's it doing now? What's the pattern forming now? Oh, complex retrace in the trend. Oh, that's fantastic. That's even better than this one. And go ahead and put your money at risk again, as long as it still meets all of the rules for a trend trade. And this then would be a first retrace in a trend, right? Not this. You thought, when you took this, you thought this was a first retrace in a trend, and it was. But it didn't break this high. And because it didn't break this high, it didn't succeed, and therefore that one doesn't count now. Now we look at this one, and this is our first retrace in the trend, because this whole thing is the retrace, and the trend has not yet continued because we haven't broken that high. Okay, now here's what amateurs say. They say, oh man, now you're changing everything. At first you said this was the first retrace in the trend. Now you're saying that's the first retrace in the trend. And friends, welcome to trading. That's the way it is. Here's the bottom line, my friend. When you take a trade, you never know what it's really going to be. Everything is 20/20. Everything is hindsight, I should say. Hindsight is 20/20, and everything in trading is hindsight. There's no certainty when you take a trade. None. You think, when you take a trade, like a first retrace in a trend, you think that's what that is at the time, but you don't know. Anytime you take a trade, you don't know what you really have. You take it because the pattern seems to be there, everything's lining up, high probability, but probability means that sometimes it isn't that. Otherwise, it wouldn't be a probability, it would be a certainty. There's zero certainty in trading. So, yeah, that's why people have such a hard time with trading, because that's the psychological challenge of trading, is because it's all shades of gray. It really, really is. There is no black and white. And so you've got to be constantly flexible. And, people say, oh, but now things have changed. And it wasn't the way when I looked at it, it's not that way anymore. Yep. And that's where money management comes in. Number one is because, when you've been trading a long time and you've lost a lot of money, then you understand anything can happen at any time. It's like they say in football, any given Sunday. Well, with the market, the slogan is anything can happen at any time. So never, never think you really know what the technical pattern is on a chart when you take a trade. You don't. Believe me, you don't. You think you do. You don't. You'll know a week from now. But when you take it, it's an educated guess. That's all it is. And so, how do you handle that? Well, psychologically, it's very challenging, and some people can never do it because they crave certainty so much. And most people do. Most people crave security and certainty, and there's neither one of those in trading. And so it's really not for most people. But if you can get out of that, if you can deal with the insecurity and the uncertainties of life very, very well and handle it psychologically and it doesn't bother you, in fact, you find it interesting, and I hate to use the word thrilling because you don't want to be too enthusiastic about the market. You don't want to be too emotional about it. But you just have to be calm, cool, and collected, not let it bother you, and you go into the business saying, every time I take a trade, I just say, probably won't work. I don't know. It's a good chance it won't. But what am I going to do? I'll protect myself with my money management, my stops. And not only stops. Stops don't always protect you, right? The market can blow through a stop. So what else do you use to protect you? Position sizing. Only allocating a small amount of money to each trade. Okay, so those are the basic ideas. Let's continue to just look and see what we've got here. Just get a feel for it. Okay, we get a big gap up. Well, obviously when you get a big gap up, you're going to get a big momentum spike. Now, here, this is very interesting too. Okay, we've got big momentum spike, comes on down, goes back up, a little bit of momentum. Now, here we've come all the way, actually a little higher than there. It's pretty much the same because we get a little 2-bar reversal pattern there. But the momentum did not reach as high. And look at this, momentum's basically just flattening out here. It's still to the upside. It did not zero out. It's still to the upside. So that's positive momentum. But it's not really increasing, right? For there to be no momentum, it has to go to the zero line. Well, what do you got? Basically, you've got a consolidation pattern here. And the market is narrowing in its range. So that's not a lot of momentum there. And that's what it's telling you. Remember, it's not telling you direction, it's telling you strength. And here's just, beautiful, beautiful example again. Higher high. But what do you got over here on DAD? A little bit of a lower high. Momentum leading price. That's what this is all about, my friends. I mean, that is worth so much. And that's why it's worth really studying this. Just observe here a little bit again. Momentum coming down. Price is not going down. This is all consolidation. But there's no momentum in the market, and therefore the angle comes down. We put in a little higher high. That's actually a beautiful short right there, because what is that? That's a false breakout. See, that's a channel. And people are channel trading this. Then you're going to have breakout traders come in and buy, buy, buy. But you look at this momentum and you should say, nope, I'm going to take the other side of those breakout traders. And boy, did you make money. Back on up we go. Hopefully in seeing this you should start getting excited. Because momentum is very, very powerful. It's a tremendous energy. In fact, it changed my trading because I traded without any momentum indicators for years. And I knew there was something missing in my trading. I knew there was something I wasn't seeing, especially with trend trades where I would take these trades and they just wouldn't go. And I'm like, man, I am definitely missing something here. What is it? And it was momentum. I didn't have any real. I had a momentum indicator on my chart, but I didn't really understand how to use it. I hadn't studied it and really become proficient at it. Here again, clear divergence and momentum heading on down, leading price down. Okay. Also notice, this is very important, people are looking for something that's going to give you every twist and turn in the market. Forget about it. There's nothing that does that. We're not looking for that. We're not trying to predict every swing high, swing low, cycle. No. We're looking for special times when we get clear signals. I'm showing you the clear signals and I'm scrolling through the rest. What's all this telling me? Not too much, really. Not too much. Here we have a higher high. Well, momentum's higher too. So what am I going to do there? I'm not going to do anything. I'm standing by the sidelines. Is someone else going to make money there? Probably someone's going to make money. That's fine. I don't care. It's just not I don't have any clear signals there. So I'm not going to do anything. Here on the other hand, I do. Okay. Now we're heading back up. Lower low, higher low. Again, all we know is we should break this high. And that's what we do. But that's all it's worth this time. And then it comes right back on down. Okay, now all of this is just momentum confirming price. So if you're in a trend trade here, it's just nice to see that momentum is continuing down. As long as momentum's continuing down, you keep taking the retraces in the trends. It's just confirming. But that confirmation, I should say just, is worth a lot. Okay, you can see how nicely the DAD line really does follow price. It follows it much better than the 50 moving average as illustrated in the manual. Much better. But you can also see that it is lagging. As far as the angles go, the turning of it, it's not going to turn up or down before price. Okay, now this is a very, very interesting point here. Look how price is basically, again, we've got a channel here. So we're into channel trading. Once you get, a couple of lows and a couple of highs, equal highs, okay, now we're into channel trading mode. But are you really going to buy these bottoms? I mean, momentum's coming out of the market. Momentum's going down. So if you're going to trade the channel, you really just want to trade the tops. You want to short off the top. You don't want to buy off of the bottom. And then if you're going to look for the breakout, you're going to look for it to the downside, not the upside. Okay, once again, a little divergence there. See, this is really for those who do want to trade reversals. This is your tool. Right here, a little bit of divergence here. Big difference in price and the lows in price. A little difference in momentum. And again, since we've been coming down 1, 2, 3, 4, 5, 6, 7. That's a 7-wave pattern. People like me to put these numbers on, I found. The extended trend is when you want to look for the reversals. With momentum divergence, you got it, and back up we go. These are beautiful trades. I take these kind of trades more than trend trades. I prefer to trade this way. I don't actually do that much trend trading. And the reason is just because the risk reward is so superior. Okay, so we've got 30 minutes into the video, so I need to cut this off to maintain the integrity of the video quality. But that's your introduction to momentum trading and the primary indicator we use, which is DAD. Next we'll bring up MOM as well, and we'll look at how MOM can actually help us anticipate a turn in DAD.